Well, welcome back to Banzai's, a channel with tools for marketers who love data, whether creating, webinars, virtual events, or engaging experiences that deliver deep analytics and actionable insights. Joining to talk about financials, kind of a bit of guidance here, cap structure, focus more on the financials today. We've got Joe, the CEO, joining as always. Welcome back, sir.
Thanks, Kyle.
Yeah, love having you back on here, brother. I want to dive right into this because basically, from a revenue standpoint, from your year end of 2023, you saw a decline of roughly 14% to about 4.5 million. This year, it seems like you're ticking up a lot with some of the recent news that we've seen in customer growth. Do you want to talk about the path to profitability? Maybe offer a bit of guidance here?
Yeah, absolutely. I think in 2023, our core product, from a revenue standpoint at least, was Demio, which is a data-driven platform for webinars for marketers. Um, we've seen over the last few years, that there was a big peak for webinar software in 2020 for demand of that. And then, we basically just seen demand kind of return to more stable levels over the last couple of years that are higher than where they were in 2019, but definitely, below where they were at the peak in 2020 or 2021 when everybody was kind of struggling with COVID and having to make purchase decisions and transitions all at once. And so essentially what you had was a giant traffic jam in 2020 and 2021 that was really profitable and led to a lot of growth for a lot of webinar companies. You've seen a lot of those companies have major declines since that peak. So, for example, you've had Hopin, which was, I think, valued at $8 billion at the peak, then ended up getting sold for $15 million to Ring Central. Probably a great deal for Ring Central, but I think the point being that uh, you saw extremely sharp revenue declines for a lot of these companies. Now, Banzai didn't experience an extremely sharp revenue decline like that. As you said, we did have some revenue decline, but mainly that was due to our historic reach business, where we had made a strategic decision based on the market demand to just kind of rework that business and rework that product offering. And so what we saw was, we took sales effort off of that and put it onto to Demio. And so actually for us, Demio revenue remained fairly steady throughout this period that was declined for a lot of other companies. And we've seen, without going into any details, but, we've seen numbers from a lot of the other folks in this industry. And we know that there are lots of folks that had major revenue declines of 50% or more over the last few years. The reason that Demio was relatively steady is because we had a focus on moving to bigger customer accounts. We saw increases in ACV, meaning customers are getting more value out of the product, expanding, upgrading. So while we did see our total customer count come down a little bit, we saw kind of a counterbalancing effect of just bigger customers coming in, longer term contracts coming in, that kind of offset most of that. So I think what you're going to see this year for us in terms of revenue catalyst, two things. One, we've seen an uptick in Demio sales. So as we reported, we saw a 46% increase in new customers added from Q4 to Q1 sequentially. So that's a major increase, and you'll start to see that revenue kind of reflect mostly in Q2, Q3, right? Because you always have a kind of one cycle lag between your sales and your revenue recognition, right, in the SaaS business. So I think in upcoming quarters, you're going to start to see the improved kind of sales performance reflect for Demio. The other thing that's going to be a major catalyst for us this year is reach. We've started to see in Q1, major customer inbound requests around reach. And now we're started to expand and look at reach in terms of what it can do in other areas, other types of demand gen. So we're really looking at reach broadly as a data-driven demand generation platform that helps marketers accomplish a wide variety of demand generation goals. So starting from a point of let's get butts and seats for your event, but we're now expanding to let's get content downloads for you, let's get email subscribers for you, let's get reviews, let's get surveys, let's get trials, let's get meetings with target customers. There are a wide variety of demand gen problems that marketers are trying to solve. And we really think that Reach can be kind of an all-in-one solution to give marketers an integrated, kind of like easy to turn on, easy to use, kind of turnkey approach for demand gen that comes with the data baked in, with all the with email baked in, with phone baked in, all the features that marketers need, and all this kind of being powered by data that we have access to, being powered by AI that we're leveraging. So I think that's a really differentiated and really exciting product. I think that's going to be a complete game changer for many of our customers. And we've already seen a lot of customer logos start to come live on that. So, Cisco is a user of this now as of end of last quarter. Uh, CrowdStrike, The Economist recently signed. So we've got some cool new customers coming on board. We'll have more customer announcements coming up soon about that. But I think that's probably the biggest growth opportunity for us this year is to focus on retooling that business, rebooting that business, and scaling that business back up. And historically, this is a business that was doing a lot of revenue for us. I don't know that we've ever previously disclosed, but prior to COVID, the Reach business was a substantial revenue driver for us, and we feel that it will be again once we get this back up to scale. So we're actively working on that. That's where a lot of our attention and energy is going right now as a company, is that product line. And I think the team are all doing great work on this. We've got a really focused team. The team's executing really well right now. So I think you're going to start to see the results of that show up, in our, maybe to some extent in Q1 numbers like sales numbers, things like that. Certainly, you're going to see, improvements over the year to our net income, to earnings, and you're going to see improvements to top line revenue. We think, if we execute well, so we believe that will all show up in the coming few months and a couple of quarters.
Yeah, definitely some catalysts to look forward to. I guess just around the conversation, do you want to give a bit of insight into your cap structure as well for those interested between insider, retail, and institutional ownership?
Yeah, absolutely. So insider ownership for us today is about two-thirds of the cap structure. So meaning that we have about 21 million shares outstanding, and of that, about 7 million is kind of float. About 14 million is kind of insider institutional shareholders, or myself personally, things like that. People that are kind of came over from the private deal, or came over from some of the institutional investors. So it really, relatively speaking, we got a pretty small float. And I think if you look at our volume, what we're seeing is a lot of people that are just holding right now. We're not seeing a lot of selling into the market right now. And I think a lot of the selling that we have seen probably has been related to a convertible structure that we've had in place with Yorkville. And I will just say, everybody's probably seen we've got an S1 on file right now related to a capital raise, so that shouldn't be a surprise to anyone. And as part of that, we're looking at what to do to clean up our capital structure, and we'll have more news coming about that in the next few days.
Well, on that note, we'll pass it off to the viewers. We'd love to know what you think and consider subscribing because when news and catalysts like this hit the wire, of course, we'll bring it to you here. But on the note, as always, we look forward to catching you in the next one.